Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where I will show you what's going on the markets from the fundamental and from the technical point of view. We'll focus more on technical analysis, as I'm trading on my account using mostly technical analysis, but I will tell you everything from the fundamental point of view, what matters. Right, so we won't talk about things that do not have influence on the market, but we will talk about definitely everything that affects the price right now. Luckily, from the fundamental point of view, yesterday and today it was a busy day, busy 2 days. Calendar was packed with interesting events, and we still have a busy day ahead. FOMC in the evening, so definitely American dollar and every other instrument influenced by American dollar, like commodities, for example, or indexes as well. We should have nice movements in the evening. First, let's start with the calendar. Obviously, I will show you. Here you have this statement. In the calendar, it will be in 6 hours. Well, we do have an interest rate decision, but rates should remain unchanged. What will be important is the statement, but many analysts say that Janet Yellen shouldn't tell us anything significant, so we shouldn't get any crucial information. What we do have here as well is EIA crude oil stocks change, important data for oil traders. And yesterday, let me show you the data from yesterday, because API data also important for oil traders came much better than expected. So we got a huge draw in the stockpiles of oil, minus 10 million barrels, and oil, thanks to that data, went significantly higher. As for today, we got GDP from UK. It came in line with expectations, and the reaction on British pound is an upswing. So it's a positive information for the traders on the British pound. As for today, we just have this FOMC decision and important data for oil traders. But not from the calendar, but from the macro events. What do we have? Well, we have results for American companies. After the second quarter, we will have results from earnings from Facebook, for example, Coca-Cola and Boeing today. As for now, I guess 80%, around 80% of the companies that already reported earnings, they beat the forecasts for that period. So that is definitely positive information, and we shouldn't be surprised that American indexes are heading higher and higher if we do have such a positive sentiment there, and companies are beating their earnings. Around 80% of them are beating earnings. That is a very good number. So in this environment, what do we have? We do have an end of the correction on the American dollar. So American dollar is comes back again to the weakness. Now we do have a discount on safe haven assets, right? Gold was heading higher. Definitely Swiss franc is much weaker than a few days ago. VIX, fear index, volatility index is on historical lows. So that is surrounding of the current situation. Also important thing on copper, on other important commodity, because copper is on 2 years highs. which is a result of expectations about the bigger demand from China, as China is apparently doing also fine. So as you can see, from the fundamental point of view, that's a really busy moment right now on the markets. Also more political, but also relevant. We have this battle between good old parties, or Republicans and Democrats, about the Obamacare healthcare bill. Yesterday, Trump and Republicans got a small win, as they managed to secure enough votes, so 51 to 50, to allow senators to start debating on the healthcare legislation. But after that, they had voting, and that replacement plan was rejected by Senate, 43 to 57, and now they have to fight for more votes again. So they got a small victory, but not the definite victory. So the thing will be this battle between Republicans and Democrats will be continued, and it shouldn't end so fast. So yes, that's the fundamental side of the market right now. Technically, we also do have a nice few setups on the market. So it's quite a good time to be on the market right now. To be honest with you, I'm having a position opened right now as well. I will tell you when I will show you the chart what is this position and how is it. It's already protected on break-even point, so it went in my direction, and I hope it will continue. But we'll see. It's already protected, so I don't actually care about this position. That's what I do. I try to limit the risk and just go with the flow, and I limit the emotions as much as possible in trading. So I do not care actually about what's going to happen with this position. It was opened according with my strategy. It worked in the first stage, and we'll see what is going to happen after that. So that's pretty much it. We got some comments also from antipodes from Australia and New Zealand, which also affected the price of those two currencies, but not much. But we have a nice trading setup on Australian dollar to American dollar. Luckily, it wasn't negatively influenced by those speeches from Reserve Bank of Australia members. So hopefully those setups will work out later. Obviously, we do have this interest rate decision, and we should expect a higher volatility. Okay, guys. First, let me start maybe with cable, as we are after the data about GDP. As you can see, it was taken positive by the market, and now we're heading higher again. Again, we try to beat this horizontal resistance here, orange one. It's this resistance is relevant, even though it was broken a few many times. But as you can see, after the breakout, it becomes the opposite, and the opposite after the breakout from the bottom, it becomes a support. From the top, it becomes a resistance. So it's still respected this 130.40. As you can see now, they are trying to correct this recent reaction. So far, I do not see any significant trading signal here, but I just wanted to show you the reaction after GDP day. Next one is euro dollar. So we marked the first potential resistance here. Well, it's not a surprise that we marked this area here. It's a distance between tops from 2016 and, well, not tops because we started with yearly tops, but let's say for the sake of this analysis, well, it is an important resistance. So from tops from August, it's a white area here which can be a resistance, and as you can see, at least some of the traders are taking profits here, and they are trying to reverse the situation. But yesterday we got a strong sell signal. Actually, this shooting star on horizontal resistance is a strong sell signal, but as you can see, traders are not following that today, so there is a strong buying pressure here still. Going against the trend, such a strong trend, is always dangerous. Even if you have a shooting star on a resistance, on important resistance, it's always more risky than to go with the trend. Also on euro dollar, I do not have a trading signal here right now. There is a nice situation on American dollar to Canadian dollar, where I think that they are just taking a rest after a strong decline. This almost without any sharp correction whatsoever. 1,300 pips. We had corrections, but no sharp corrections. As you can see, this is a wedge, this is a flag, this is a flag, pennant, flag, and now we're having channel down formation. So no sharp correction. There is a strong selling pressure here. I think that traders, what can trade here is either a breakout of this horizontal support, but here, few pips lower, we do have long-term lows. 20 pips lower, we do have long-term lows. Let me show you those. It's here. So I'm not surprised that we slowed down a little bit, close to those very important supports. Actually, the chance for a breakout of this upper line of this channel down formation increases. That's a good place to start taking profits here now of this movement. And after the breakout, traders should expect like 100 pips movement, which can be a nice short-term trading occasion. So watch out for the breakout. On American dollar to Swiss franc, you can see this retracement from the safe haven assets, escape from Swiss franc. After the breakout, they created this flag. Flag is a trend continuation pattern, but it failed. And it was on a nice place because this flag touched this resistance from the bottom. So many traders using price action, they were waiting here for a sell. But it failed, and this can be considered as a failed pattern or even a false breakout below the support, and that's the penalty. That's what we are saying very often, that false breakouts, they works and they give strong movements in the opposite direction. So if you entered here, probably you had a stop loss here. No worries, 20 pips stop loss. But if you waited and saw the false breakout here, you could earn like 100 pips, which is a very good amount of money, depending obviously from the volume. Australian dollar to American dollar. That is a good one, guys. What we do have here is a symmetric triangle formation, and a few weeks ago we broke the upper line of it, which in theory triggers a buy signal, a long-term buy signal. So the price was breaking local resistances like this horizontal one, which was present on the chart since August 2016. They also broke 23.6 Fibonacci, but look at that. That's a downswing from 2011, right? And we had 23.6, and look at that. They totally respected that with a great accuracy. As you can see, the price stopped here, retraced a little bit, then broke that line. And now what we are having here is a rectangle, I'm sorry. Rectangle is a flat correction pattern, is a trend continuation pattern, so we should expect a bullish breakout here, so a breakout of this horizontal resistance mark. with yellow color, especially that today we bounced nicely from the horizontal support here. So entering here, stop loss somewhere below 40 pips. For the first target we have 55, not great in terms of the potential risk to reward ratio, but we should expect a further we should expect a breakout here, a bullish breakout here, and a further continuation of this movement. That's how I see the situation on Australian dollar to American dollar. Let's go to the next instrument, which is British pound to Japanese yen, where you also do see a positive reaction after GDP in UK, and it all makes sense from the technical point of view. There is a very interesting situation here, a nice trading setup. In the long term, what do we have here is an uptrend. Well, here a downtrend, right? But the downtrend line was already broken. If we will set a downtrend line here, as you can see perfectly, it was broken, and they use that as a support even here. We do have an ascending triangle formation, so lows are higher. We have a horizontal resistance here, and the buying pressure is rising, as you can see. Right? Now, what do we also have here is this horizontal line. Actually, I want to name it a support right now, but it was a resistance in May. Here, after the breakout, it became support in June. It was also a support in July. Support after the breakout, it was a resistance, and now after the breakout, it became support as well. This recent reversal was started by inverse head and shoulder formation, so left shoulder, head and right shoulder. We broke the neckline yesterday. With this momentum used here, we broke the horizontal resistance and transformed this resistance into a support. So with the positive reaction from the fundamental point of view, we do have also a positive situation from the technical point of view, as this bearish price action can be considered as a false breakout. It is a false breakout below this support. It is an inverse head and shoulder formation. So those two factors, they both promote an upswing. The fact that we are above this level also promotes an upswing. Long tails also promote an upswing here. Good GDP from UK also promotes an upswing. So that's a buy. Last one for you is American dollar to Mexican peso, where on a daily chart, when I was recording a trading sniper video, we had a nice hammer. Obviously, the day has not ended, and we still have attractions today, as you know, remember, FOMC. But we're on a potentially very nice place to sell. So we do have a shooting star. Shooting star itself, well, on a daily chart, shooting star can be strong, but itself, it shouldn't be considered as a strong signal. What we need here, what we need more is a localization, so a place where this pattern is present. And look at that. How about that for a good place? That was a support. After the breakout became resistance, tested again twice. It's also a 38.2 Fibonacci level of this downswing, and it got rejected. It looks like it got rejected. Now we do have a small correction, but it's even better for the traders who are late for the initial signals that they can sell here, not lower. This trading opportunity has a great risk to reward ratio, because, for example, if you sell here, stop loss is somewhere here, but you should expect a movement here, so at least like 4 to 1, 5 to 1. But again, before taking this risk, because it's risk, you have to think how will you handle it? When will you handle it in the evening when we will have an FOMC? It's American dollar, so it will be hit. It will be hit by this data, by this event, by this news. You have to ask yourself if you can handle this. Silver touched this rectangle that we highlighted, touched it yesterday and bounced from it, right? So, well, it's also a flag, not the prettiest flag in the world actually, maybe different color. Or I can remove this one because it's a false breakout. I can remove it, no reason to have that. Okay, that is a flag. The flag is the trend continuation pattern. Trend was bearish. Also, we got two important resistances. Let me show you those. Trend line, horizontal resistance. We didn't quite actually get there, so it shows you that there can be a big selling pressure here on top. Also on a daily chart, the yesterday candlestick is not very encouraging, and the day before shooting star in a doji. This is a kind of a signal for a further drop, right? It does not look optimistic for the buyers. It does not look like they are about to force this resistance, unfortunately, because as you know, I'm a bull on gold. Well, more kind of a long-term situation, like few years, maybe not now. Now American dollar to Japanese yen. But to be honest with you, I was lately thinking about the appetite for gold. I think that if not cryptocurrencies like Bitcoin, Litecoin, and all that kind of coins, the demand for gold would be significantly higher, because I think that those people who buy Bitcoins are kind of the same people who buy physical gold. Like, they want to protect their assets. They want to. They don't want to keep the money in the bank. They do not actually believe much in the system, like kind of stock trading. They want to protect their assets. They want to diversify their portfolio, and I think that they perceive Bitcoins as kind of safe haven asset, even with the recent volatility and all that risks that we have associated with the Bitcoin. I think, well, it's kind of also owning physical gold. It's kind of protective from the government as having Bitcoins. I think that that group of people which is owning Bitcoins and other cryptocurrencies is very similar to the group of people who want to own a physical gold. So I think that at some point the demand for gold is suffering because of the rising demand for cryptocurrencies, but it's just my small theory. American dollar to Japanese yen. No signal here. American dollar to Polish zloty, we can have a small reversal here, especially after yesterday candle, after candle from the last week, which is a hammer. In Poland, there are a few political problems at the moment. So my currency is strongly affected by it. Well, it's usually not influenced by the local factors, but last 2-3 months it's significantly weaker against the local currencies like Hungarian and Czech crown. So it makes us believe that it's this political issue. Here what we can have is a correction here, aiming the horizontal resistance and upper line of the channel down formation, and after that the decline should continue. Euro to Japanese yen, still waiting for the breakout from this pennant. Yeah, it's a pennant, it's not a symmetric triangle, too small for symmetric triangle, so it's a pennant, so we should get a breakout of the upper line here. Australian dollar to Japanese yen. On a weekly chart, last week candle, shooting star. So far so good, they are not declining sharply. But we have to keep that in mind that if they will be able to go any lower, we will have another shooting star here, which on such an important horizontal resistance can be a very negative signal. So me, I'm a long-term trader, well, swing trader, so let's say I keep my positions open for a few days, but that would be a nice trading occasion for a long time. Not maybe in terms of the swaps, but for the swaps we do have better setups. Like for example here, New Zealand dollar to Japanese yen, where more of kind of an upswing is expected. As you can see, every contact with this horizontal resistance so far resulted in a sharp reversal, especially those two. But here we can see a sideways trend. Sideways trends below resistances, they indicate a willingness for a breakout. If there will be a breakout of this line, maybe let me change the color, it will be for the better visibility. Once we break this horizontal resistance, we can think about going long here. Okay, and gold. So yes, gold is this position that I do have a short trade open on. I tweeted about that yesterday on our Twitter account. So gold is reached an important resistance, horizontal one. As you can see, it was important in May. Support in May and June after the breakout at the end of the June resistance, and is tested as a resistance again. What we do have here also is this test was performed with head and shoulder formation. So we broke the neckline, this triggered a sell signal, and you were warned on Twitter account and in written analysis. I also wrote that the first potential target is here, lower line of this channel down, and we reached that. We used that as a support, then we bounced, we used the neckline as a resistance. So a typical price action, that's just the typical, just how it's supposed to be done. In every book of the price action you will read that. Also, this bounce from the lower line of the channel up formation was supported by the correction quality pattern. So those gray corrections are the same in terms of depth. Let me delete them for a better visibility here. But finally this line was broken and the breakout increased the momentum, and I said that the second potential target is here, this green line, which is $1,243 per ounce, and we actually touched that. I think that I opened short position somewhere here, stop loss was above those tops, so it's already protected on break-even point. Now we do have a bounce from the support, which actually can kill this this downtrend. But as I said, I don't mind much because it's already protected. Even if it wasn't protected by the break-even point, I wouldn't mind as well, because it's a small position. I'm not going big, you know, as when I'm trading, I'm risking like 1% of my capital, not much. That's what makes me a relaxed, profitable trader. So how far can this correction go? I would say maybe to this point. If we will break this resistance here, I think that will be the end of the downswing. I don't think it's gonna happen now. I think that all the pairs connected with American dollar, obviously gold is quoted in dollars, all those pairs, all those instruments will stop now. We'll pause now before the FOMC. I don't think we should expect any significant movements ahead of the FOMC. Okay, my friends, thank you very much for attending daily analytical report. As you can see, interesting from the fundamental point of view, but also a few nice trading setups on the market. One minus there is that they are all riskier than usual, because we do have FOMC. So an event which can be a big marker influencer in a few hours. Thanks very much and see you next time.